Hello, everyone. Welcome to the weekly roundup. Today we will cover interest rates and market sentiments. Hello, Ben.
Hey, Eva.
How's it going?
Going pretty good, except for it's a rainy day, isn't it?
Yes, it is. Summer is over.
Oh no, I don't think so. Hopefully not.
Hopefully not. Just one more week.
That's right.
Okay, we're gonna start off with interest rates. With Powell's Jackson Hole speech and recent market moves, has anything changed in terms of interest rate cut expectations and inflation outlook? What were the key takeaways from his speech?
Yeah, I think, well, at least initially, the focus he was talking about was getting more flexible with inflation targeting. And so the market interpreted it as that they are going to cut rates sooner than expected, maybe, or maybe a little bit more aggressively than expected. And so odds went pretty high to a rate cut after the meeting. By the time Monday came around, as they digested more of what he said, we're still likely to see a cut in the US, something in the neighborhood of 80% chance of a cut in the US in September. Good. I thought that Canada's would have stayed similar as well, but it continues to Canadian cuts continue to look like more of a coin toss now in September, as opposed to leaning towards a cut. We've been back and forth so many times this year, and I think it's been fairly confusing given the inflation outlook, to your point. So. I think at least my interpretation of what he said is that he's more concerned about unemployment rising. The health of the economy is starting to deteriorate a little bit in the numbers that he's seeing. So I'd still line up with the fact that they're going to cut rates a few times in the US this year. In Canada, if they don't cut, probably some Canadian dollar strength temporarily. But I'd expect Canada to continue to cut because the economy continues to slow and unemployment's still rising as well.
Still on the Canadian side, what data points should investors be watching in terms of interest rate expectations?
Yeah, I think the continue to watch the inflation numbers, so CPI and PMI, which would be the Purchaser Manager Index, and then everyone knows the CPI number. So continue to watch that. Right now, it looks like most companies have been absorbing the pass-through and haven't been putting that onto the end consumer yet. So I think watching if the PMI numbers flow through to CPI and if we actually see inflation kick up more than expected. So that'll be important to watch those two variables. And you continue to watch bonds in both Canada and the US as good signals to what's going on. So in Canada, I think the 5 year is more pertinent to watch because Canadian market is much more reliant on real estate on the short end. So I'd be looking at that 5 year rate and seeing how much it moves as well. But right now, the bond market continues to point towards rate cuts in Canada. But yeah, I think PMI to CPI would be the kind of the two metrics to watch in Canada and the US.
Okay. Some interesting news this past week. Trump announced Fed Governor Lisa Cook's firing effective immediately. How did the markets react to this, and what does this mean for Fed's independence going forward?
Yeah, I mean, I think it continues to be challenged. I think everything he's doing right now is really pushing the envelope and continuing to challenge that view that it's an independent body. And so, oh, geez, what's going to happen? I guess we'll see. He's an expert in the court. Certainly, Trump is. So, we'll see what happens. She's said she's going to not step down. At least there's something new has changed, and she's going to sue him. So we'll see. But I think what it comes down to at every point, he's gonna, if he doesn't like you or you don't like him, maybe, he'll make your life miserable. Whether he has the ability to make these decisions or not, he's certainly trying to enforce that. If she did something wrong with mortgages and some of the things that he's accusing her of course, she should face the consequences of that. But I think it's more the first point you raise is that the independence is being challenged.
How did the markets react to this?
Hmm. I'd say neutral for now. I think the market certainly is continuing to react to anybody he puts in is more likely to cut rates than raise rates. And so I think the more progress he has with putting individuals in there that want to provide softer policy, then the markets probably generally react positive to that. But so far, fairly neutral.
Okay. We saw some key earnings releases this past week from Nvidia to some major Canadian banks. Is there anything worth noting, and what do these results signal for the market going forward?
So on the Canadian bank side, Nvidia's was today, so certainly comment on that. But on the Canadian bank side, I think, at least I feel like a broken record sometimes when I talk about the Canadian banks because we seem to inevitably go through these cycles, increase loan loss provisions. They sell off all their mortgages to reduce their debt. They don't use their loan loss provisions. The market take that as a positive, and then the stocks rally. So I'd say generally relatively positive news for the Canadian banking sector. A lot of these banks are close to or touching 52-week highs, and some of them are touching all-time highs. So look, as if the Canadian economy slows, as that's what we're suggesting it is, the banks are probably pretty fairly priced at these levels. Would certainly be getting aggressive around what to do with them. But they've been smart navigating the structure the Canadian financial system provides, reducing the risks when they can, putting aside extra capital if they need it, and they've navigated quite well. As for Nvidia. I think it's interesting. They came out with huge numbers, 56% year over year revenue growth. Obviously, explosive numbers continue to come out of them. Really difficult if you're a valuation nut, if you care about those levels. But from a big growth, big cap company, their numbers were good, but certainly not good enough for the market because they're down kind of 2%. But Nasdaq is up into Nvidia, we'll say miss. But Nasdaq's positive today, and that's on the back of some other earnings. Um, the one company that we have some exposure to is Snowflake. Snowflake is a competitor to AWS, the web services. And so Snowflake had good earnings last night, and their stock's up 20% today. I think a lot of these web services are becoming AI. Um, I don't want to say influencers is because that's probably not the right word, but they are AI juggernauts from the perspective is they house all this data. So
Yeah.
if you have the data, then you can use it. And so Snowflake had good earnings, but NVIDIA, because they're priced so high as well, they need to be perfect in order for the market to really get excited about what's ahead.
Okay. Let's see the charts.
Just let me know when you can see it there.
Yep.
Okay, perfect. Yes, so we are recording this Thursday around 1:30, August 28th. So anything that happens after this, we'll certainly comment on next week. So I appreciate you joining. So I think there's a couple of things I wanted to hit at because this tariff roller coaster doesn't seem to go away. And so there's been so much going on. And as we go through these different stepping stools, China, Canada, Mexico, it's targeting fentanyl in both cases. Then global autos, reciprocal targets. Looks like a deal with the UK. Attack steel, aluminum, China truce, more steel and aluminum, Vietnam deal, Japan deal, attacking Canada again, penalty on India. There's so many moving parts that we're going stepping up and down and up and down. I think it's important to just be conscious that all of these things are drags on the global economy. And so, from at least the way I interpret what's happening, is the US is certainly getting revenue. And so people say, well, is that why the US economy is doing so well? I think the US economy is doing okay, and it's a bit of a sugar boost to the revenue short term. It's certainly not enough to offset their lost revenue or the global lost revenue. And so this is slowing the economy globally. The US has some inflation pressure, and the rest of the world is seeing the opposite of that, is some deflationary pressure. So this is still very important to be conscious of, because tariffs are going to continue to swing the global economic activity, and we need to be conscious of the reverberations from that. And I don't think we've seen any of them just yet. And so to our earlier discussion, Eva, just about inflation, I think, when we look at what has happened, are we seeing reacceleration or deceleration? There's an index for everything in the world, but this is the US inflation surprise index. So, the surprise index is, does it surprise to the upside or the downside? And certainly now we've seen, at least so far year to date, big surprises to the downside, and certainly generally surprises to the downside since we peaked in 2022. So we still anticipate that will play the part. As we start to get a little bit later into market cycles, and we've had a pretty good run, I guess, to the upside in a lot of places, I try to be conscious of what's happening to the ETF space. And for those that don't know, ETF is an exchange traded fund. It tracks something. Uh, in this case, these six were launched by Beta Pro, and they are doing triple long and triple short. And so these are very aggressive ways to play different types of markets. And if you look at the ones listed here, you got the TSX, so had a good run. Semiconductor index also had a good run, and then long duration treasuries. So this gives you triple exposure to the upside and triple exposure to the downside. And so as you start to see these things launch, it tends to happen closer to the end of a top and or bottom, which I think is the case in these tops and semis and TSX 60, and maybe bottoms in the other one. So worth watching, seeing how they do, see how much money comes into this space, but highly volatile investments starting to come out. So we've had plenty of discussions about gold, and we've had lots of conversations about gold miners, and there's been a pretty big divergence for quite some time where gold has outperformed the miners. And so now I think we're starting to see a bit of a breakout. If you're a technician and you like these kinds of things, we had a base forming here over the past 2, 3 years, and now it looks like we're starting to break out of this channel. This would make many technicians quite happy and excited about the potential breakouts here. So I thought this was a great chart to be conscious of. If this starts to extend now, that's when you get pretty material periods of outperformance for the miners. And so it'll be something that we'll continue to watch and gauge as to what we do with positions at this point. As always, the opinions expressed do not necessarily reflect those of National Bank Financial. If you have any questions, conversations, want to talk about it, please feel free to reach out to me and or your advisor. Your risk tolerance is different by each individual, so if you have any questions, certainly feel free to consult us.
Thank you, Ben.
Mhm.
So what's on the agenda for next week?
Well, so we have a bit of a short week next week because markets are closed on Monday. It is Labor Day weekend, so a little bit shorter next week. So we would be, conscious that we're getting back into September. And as we head towards September, October, if you like history, there's been some pretty dark periods in September and October in the markets. And so, as you see, we'll say everyone come back to work per se in the financial markets, volatility tends to want to tick up. And so I'd be watching that quite closely, just saying, what do we start to see happening? Is volatility kicking up? Where is it coming from? What do we need to be worried about? And so I think that's what I'd be watching. The other thing I think that caught my attention this week, and I started my career as really focused on fundamentals, Benjamin Graham, value-based thinking, and so I do still care about those levels. And there's one index that I follow closely still, which is the CAPE. It's the Schiller index that Robert Schiller created, and it manages the view on like price earnings. And so he has his own price earnings multiple effectively. And so we're reaching 39, just over 39. And what that means is that this is the highest level that we've seen on the S&P since 2000. So as we start to extend up to these levels, it's one that Buffett follows as well. We start to bounce up around these 39, 40 levels. It's something that gives me a bit of concern for valuations. So we'll be looking at areas to say, are there still reasonable levels internationally, globally, emerging markets, those kinds of things. And so I'd be watching that quite closely because valuations are getting stretched.
Yeah, absolutely. Lots to watch out for.
Mm.
Thank you, Ben.
Welcome.
Thank you, everyone. Remember to visit, subscribe, and follow us on YouTube and LinkedIn at Hart Investment Group. The link to our daily financial heartbeats will be in the caption of this video and also in your email box. For our clients, please reach out to me if you'd like to schedule a meeting with Ben or if you have any questions. Thank you for listening and have a good long weekend.
Thanks,
Bye.
everybody. Bye.